Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Friday the 10th of August 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Alright, let's take a look at overnight changes and price moves to be aware of. And having had several quiet days earlier in the week, we certainly can't describe the last 24 hours as being quiet. We've seen some very major moves in the FX markets, most of which have favoured the US dollar. So just to flag a couple of the key points, the euro falls by 0.58% against the US dollar, trading at 114.59.50 shortly before we recorded the video. The Australian dollar trading at 73.34.90, down around 0.48% against the US dollar. The Mexican peso gives back 0.38% against the US dollar, trading at 18.75.10 shortly before the video was recorded. And perhaps the most impressive move on the day, dollar index 95.99, up by 0.51%. Now, if you were watching my webinar yesterday morning, you will have heard me talk about some of these points and the reasons that I thought that this period could see a bounce in dollar index and a weakening in some of the other currencies we've touched on here. And we'll look at some of that in a bit more detail as we move through the video. Okay then, having seen those significant moves, let's see what's on the calendar today, what events may move the markets further. Quite a busy calendar today. We've already had Reserve Bank of Australia's monetary policy statement from its last meeting. We'll look at that in a bit more detail momentarily. To come, the highlight of this morning's data, gross domestic product for Q2 out of the UK, and that'll be accompanied by manufacturing production data for the month of June. That's all at 8:30. Then we have a break, 4 hours really without any kind of major announcements, till 12:30, and we cross the Atlantic to the USA for CPI, Consumer Price Index data. That's both inclusive and exclusive of food and energy, so core and non-core measures, year on year and month on month data for the month of July. We'll also see Canadian unemployment today. That's for July as well, and we'll have net change and participation rates as well as the actual headline unemployment data. Fast forward to 1700 and the influential Baker Hughes US oil rig count. US data this week, of course, has showed a build in crude supplies in the States. I wonder if we'll see a higher number of rigs out active in the US on the back of that. And then at 1800, if you're still in the market on a Friday evening, it's the US monthly budget statement for July, a chance to peruse the state of US government finances. Okay then, well, breaking news and comment that's caught my eye overnight. And first of all, the euro, as we saw, has hit a 55-week low versus the US dollar, which in turn hit a 56-week high as measured by dollar index. In the webinar yesterday, we were watching dollar index trade at 95.0203, wondering if we might see a move to double lower and then a bounce from there. That's exactly what we got. Following on from that, the US 100 index closed higher for the 8th day in a row. Tech shares in the US driving the momentum. What I did say in yesterday's webinar was, would the market get behind dollar index, and by doing so give it sort of complete tacit approval to the US economic recovery or continued growth. I think we could say it's probably done that now. Meanwhile, switching to Australasia, the Reserve Bank of Australia has said in that monetary policy statement that near-term inflation is likely to ease. That's not what the market would have wanted to hear, because inflation is pretty key as far as the RBA is concerned in terms of moving interest rates. We also said in yesterday's webinar that we thought the RBA would have to come clean and give, and be open and honest with the market and say that it's not going to be able to raise rates in the near term. And I think that goes some way to making that statement plain. Meanwhile, staying in the Antipodes, New Zealand manufacturing PMI falls for a third month in a row. In July, the data has fallen since April's 27-month high, so another dent in the hopes for the New Zealand economy there. Okay then, food for thought, something to take away with you into the trading day and beyond. Why not think about this? The question I want to pose this morning, having looked at all the data and the moves yesterday, is, are the markets now lining up behind a binary outlook on growth? And what I mean by that, a growth outlook which is one in which the US is expected to continue to expand whilst everybody else struggles. Eurozone GDP data due out next Tuesday might be the acid test for this viewpoint. The chart on the right is taken from yesterday's webinar, and it shows Credit Suisse's outlook on global growth. Their expectation, and presumably many other people's now as well, is that US GDP would accelerate in 2018 and probably into 2019 as well, whilst many of the other global peers fail or struggle to grow. And so the chart shows the US projections for US GDP growth, I should say, and what's expected to happen in the rest of the G7 ex the USA, and you can clearly see the implied direction of travel there. Okay, please take a moment to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about the suitability of leverage trading for you, then please do contact your Pepperstone account representative, and do take a moment please to read this risk warning. Thank you for your time.